Good afternoon. Thank you for joining us for the Keys to Home Ownership. My name is Amy Kaufman. I am the mortgage originator here at Health Advantage Credit Union. In the next few slides, we hope to bring a better understanding to you as the process and the steps that you need to do to purchase a home. The first step is to do a pre-qualification, or what I would like to prefer to do is a pre-approval. Most realtors here in the area do prefer that you are pre-approved. So as they are showing you homes, especially with them not staying on the market so long, that you are able to write an offer at the time you view the house if that is something that you're interested in. I do pre-approvals a couple different ways. You can either fill out an application online, and then I will get an email notification that you have done so, and then I'll be in touch with you within 48 hours to review. You can make an appointment with me to come into the office, or you can call me and give me the information that I need to do the pre-approval. When you come into the office, in most cases, I will ask you to bring your last 2 pay stubs and your last 2 years tax returns. If we do the information online, you will use gross income, and feel free to reach out to me if you have any questions how to fill out the application online. And then when you call me, depending on how you are paid, I may have you email or fax in some documentation for me to review. At the time of pre-approval, I do pull a full credit report. It is pulled from the 3 bureaus. My credit report, if you purchase and close a home within 4 months, I only need to pull the 1 credit report. When you do a pre-approval, if you do not find a home within those first 4 months, I do not automatically re-pull a credit report on you. I will wait till you find something that you wish to write, and then we can update the credit at that time. We don't want to be pulling a lot of hard hits onto your credit, which will in effect adversely affect your credit score. So the steps with buying your house, again, the most important one is to get pre-approved. You may think that you are capable of purchasing a home, let's say for $100,000, pay a $700 payment, but I need to show, based on your income and your liabilities, that it shows that you can afford that payment. When doing a pre-approval, I will email you or give you in person a pre-approval letter that you will give to the agent that you choose that you are working with. When purchasing a home, I do strongly suggest that you do work with a realtor. You can work with whatever realtor you feel comfortable with. This is a major step in your life, so I do suggest that you are comfortable with the realtor that you are working with. After you've picked out a house and you have an accepted purchase agreement, which the realtor will help you with, you will do a home inspection. The home inspection generally are done by a licensed home inspector, although it is not necessary that they are a licensed home inspector. Several home buyers have family that is either a licensed contractor or so on. You can use somebody, a friend or whatnot, to do the home inspection, but we definitely recommend that you do some sort of home inspection. We, for the mortgage, are only going to require an appraisal, which will be part of your closing costs. The appraisal will call for repairs if they are on the health hazard, like a water in the basement, a leaky roof, anything that's a health hazard. But the main reason for an appraisal is to establish that you are paying a fair market value for the home. After your home inspection is completed, a lot of times I will have you email, or your realtor email me, the purchase agreement ahead of time so I can work up some numbers for you. After your home inspection is completed, we will schedule an appointment to come in, and I will have you sign all of your paperwork to start the mortgage, and also have you bring in any credit documentation that I need, such as possibly updated pay stubs, tax returns, bank statements, and so on. Once all the necessary documents are signed and you have given them to me, I will submit your application to our processing department. It is processed all within our State Street location. The processors at that point will verify all the information as far as do employment checks, do flood checks on the home, check in the appraisal once it comes in. We do statuses generally once a week to you and to the agents to keep you up to date as far as if there's anything else needed with your application. and also to let you know if the appraisal's in, title work in, and so on. Once we get everything, my processor will send the file to underwriting for final approval. Depending on the amount of files in, could take 48 to 72 hours for your approval. Once it comes out of underwriting, the processing department will get with you if there's any conditions of the approval, and also they will let your realtors know that it is time to schedule the closing. I do want to point out also, when you're doing your home inspection, another thing that you should do is contact your insurance agent for a homeowner's insurance quote. You will use whoever you wish for the insurance quote. And then after we get your approval, you will finalize the insurance with your agent to make sure that they can give us proof of insurance effective the date of closing. So it goes kind of slow in the beginning. Once we order the appraisal and the title work, once those come in, everything goes pretty quickly, but we will have generally a 2-week time, maybe 3 weeks, depending on how far the appraisal is scheduled out, that you won't hear a whole lot. We're just kind of waiting for items to come into the office. How to choose the right type of mortgage loan. What I will do when we're talking is I will look at your credit to see what your credit score is, what your debt to income ratio is. Also, one of the main questions I'm going to ask you is, how much do you want to invest in buying a house? Do you have a down payment? Do you not have a down payment? I'm also going to ask you, depending if you pay rent or if you live at home, what's your comfort zone for your payment? So I do suggest that you always do some self-budgeting before talking with me, just so that you can get an idea of what kind of a payment you think you are going to be qualified for. Just because I qualify you for a $200,000 house doesn't mean that you're going to be comfortable with that kind of a high payment. The two types of financing that we offer here at the credit union is rural development financing. That loan is 0 down, and seller can pay your closing costs and your prepaids up to 6% of the sales price. Conventional financing is available with a first-time home buyer, which is defined as not owning a home in the last 3 years. There is a 3% down payment, and depending on how much you can or how much you are putting down, the seller can contribute 3 to 6% towards your costs. The rural development financing does have an income limit, and the property does have to be located in what's considered a rural area. The rural development also, you cannot own any real estate at the time that we close on that mortgage. Conventional financing, like I said, you can do the 3% if you are a first-time home buyer. Other than that, the minimum down payment would be 5%. Closing costs, which I will give you an estimate here in a few slides. I will get, depending on the program that you're going with and the price range, I will do estimates for you. And as you look at homes, my buyers will call in with the address and sales price, and I can do estimates as you're looking for homes so that you have a general idea as far as what you're going to need as far as for down payment and cost, and also what kind of a payment would be associated with that price range. Common mistakes that jeopardize your loan qualification and how to avoid them. Do not open up any new debt. Even though my credit report is good for 4 months, it is not a good idea to go out and open debts for furniture or purchasing, lawnmowers or whatnot. Wait until after we close before you open any new debt. Job change. If at the time I do your pre-approval and you do change jobs before you have found a house or even after, you need to notify me as soon as possible, as depending on the job, how you are paid, it could change the outcome of your pre-approval. So if any changes with income or job, you do need to let me know as soon as possible. Another item is, do not move your money around or make large deposits that cannot be documented. We will collect 2 months of bank statements, and those 2 months we're going to be looking at them for large deposits that are out of the norm, and we don't want you opening new bank accounts, transferring money, because we do have to document all of that. Once you start the pre-approval process, keep your bank accounts where they are at. If for some reason there is going to be a large deposit, such as maybe you sell a snowmobile, a boat, or something like that, please get with myself so that I can go over with you how to document the sale of the asset. And again, any questions on that, it's always best to just reach out to me than to find out later on that it does jeopardize your mortgage pre-approval. How to properly plan for real costs of owning a home. In the slide, I have given you just a basic example of purchasing a house. I base the sales price on 150,000, 30-year fixed, the closing costs that are generally associated with that. When I do a cost estimate for you, you're also going to have what's called prepaids in addition to your closing costs. The prepaids is setting up your escrow account. Anytime you put less than 20% down or a rural development mortgage, you are required to hold your homeowner's insurance and your taxes in an escrow account, and we will make those payments for you when they come due. So the prepaids, I am putting in the taxes, the amount, and when they come due to establish how many months when we close, I need to put into an escrow account so that when those bills come due, there's sufficient funds in your escrow account. The prepaids will also include your first year of homeowner's insurance. And again, you're going to use whoever you want to, but we will pay that at closing. And then next year, it'll be paid directly out of your escrow account because you will pay 1/12 of taxes and insurance in your monthly mortgage payment. The closing costs that I've listed out here, generally they are all the same flat fees. The title work fees, you'll see title lender coverage, that does go off of how much you are financing. A few of the fees like the verification of title or verification of employment or the tax transcripts, those may or may not be needed. But the closing costs are third-party fees that that are charges that we are going to occur for getting the mortgage. So again, as you're looking at houses, if you want different price ranges or on particular homes, I'd be happy to do these for you based on what you are looking at and what you are qualified for. Any questions, please feel free to either email me at the office or my direct line is here on the slide. Thank you, and I look forward to talking to you soon.